Today I'm just going to show you how to use fib extensions rather quickly and also Fibonacci as a whole. As you all know, I never use indicators. I don't use indicators on my charts. I trade with price action effectively when I'm using charts, but I've had a few requests and somebody asked me how to use fib extensions, so I thought, you know what, I'll put this video together for you guys so you guys can know how to use. There's nothing wrong with knowing how to use certain indicators in the market or other strategies. It's great to use confluence as well when you're trading. So if you see a trade on your price action not quite working out for you, not quite sure which way to go, sometimes it's handy. As I showed you last week, I showed you the RSI, and this week I'm showing you some fib extensions or fibs and how you can use them for confluence in your trading. But just sort of draw it on, have a look, and then maybe take it off. Something to that effect might actually help you in your trading. In the 33 years that I've been trading, I've probably used every indicator under the sun. I've probably tried every system under the sun. Some of them have worked and some of them haven't worked. So I couldn't possibly say to you this one's better than that one. As I've told you guys a million times, trading is 50-50. Charts can't predict the future, you can't predict the future, and every single system in the market actually works because some genius backtested it somewhere down the line. I'm going to take you to the charts. I'm going to show you that now. But for those of you who don't know me, I'm Rob. For those of you who do know me, I'm still Rob. It's Coffee with Rob. Let's have some coffee. Let's go and have a look at the charts. So let's go and quickly show you how you can use fib extensions and how you can use fib as well. So first I'll go through the fib, then I'll go through the fib extensions, and then after the chart, I'll take you and we'll talk a little bit about strategy and how you can actually make money in the markets. Because as I've told you guys a million times before as well, you've got to learn to separate the strategy from the system being the charts, the 50-50, and the strategy being the way you make money in the markets, the way you make a profit in the markets. Charts will always be 50-50 and a win rate will never, ever make you money. It'll just give you a win rate. And a win rate's great because you can walk around saying, oh, look, I won 8 trades out of 10, but I lost $1,000. That's kind of how it goes with win rates. But okay, by the way, you can use fib on any time frame you want, but I prefer the 4 hour. So I'm going to show you on the 4 hour charts. Let's go and have a look at the charts, guys. Go, let's go and see. Right, so here we are on the charts. We've got the charts open. We're having a look. Choose a chart to do a fib on. There's an S&P 500. There we go. Let's use the S&P 500. Do you know what? Everyone uses the S&P 500 anyway. Everyone trades the S&P 500. So let's use the S&P 500, shall we? Let's go and see what's going on there. So we've got our fib extensions here. Now, if I just wanted to do a normal fib, just a standard fib retracement, if I wanted to take a purchase on the S&P 500, where would I take it? Where would I take the trade on this particular chart? What I would do, I'd draw the fib from the bottom here. You can go all the way to the bottom. The trouble with fib is people tend to draw it from a different area. Now remember, we trade with price action, we trade with support and resistance, and we trade 3 ways. We trade with the trend, we counter trade the trend, and we trade in a range. What you use the fib for is trend trading if you need to use it, but you don't need to use it. You can just use the trend lines and keep it simple. I'm going to show you how to use the fib because some of you want to know and some of you had asked me. So what I'll do, I'll take it from the bottom and I'll draw a Fibonacci in here. So that's a Fibonacci. It was created by a man called Fibonacci, would you believe? Somebody called Fibonacci. It's a cycle of numbers and percentages in the world that are found in everything. They're found in plants and all kinds of things. And it's a cycle in the world that seemingly has a stunning way of working out with everything else. And if you look at trading, it kind of does work out like that. I'm not going to go into the exact science of Fibonacci. It's not my thing. At the end of the day, I mean, I never trade with it, firstly. And when I do, it's... In my career, I think I've traded with it once or twice. I've used it once or twice. But it's not something I trade with on a regular basis. Now, let's have a look here. So now you've drawn the Fibonacci in. What you would do, this area here, between the 0.618 and the 0.516 or whatever it is, okay, that is your golden zone, the 50 and the 61. That's your golden zone. If the price lands in that golden zone, that's a buy zone. That's an area where you want to buy it. So what you would do is you would probably look at it and say, I'm going to buy it in this area. I'm going to buy it here, right here. And then it'll go up. And that's what happened. It went up and it went all the way up to here. When do I sell it? Here's the problem. You know where to buy it. Now you've bought it in the golden zone. Now where do I sell it? Where do I get out of this trade? Where do I remove this trade? Now that's where the Fibonacci extensions would come in. Now you don't need Fibonacci extensions to find an area where to sell. You can draw a trend line in here, see where it ends on the trend and decide to to move your trade out there. Also, as I've taught you guys before with price action trading, when you're in the trade and you've taken your stop loss and you know where you are and you know what your targets are, just take your stop loss, move it up, put a trailing stop behind the price and trail it all the way up. You would have had your target when you took the trade. But okay, for those of you who haven't done that, and for those of you who want to know how to do it with fib extensions, I'm going to show you. So what you do on TradingView, you've got this thing here called trend-based fib extension. What you got to do is draw that in. But then there's a little trick to this, and that is you got to take it down to the area where you purchased it, just out of interest. Okay, so you purchased it at that area. That just makes it a little bit more interesting. So now you know that's an area where you purchased it on the golden zone. That's your low area. Your target extensions are there. Where's your target price? These are little areas like the Fibonacci that give you these little numbers, these little percentages in Fibonacci, and they tell you where the price is going. So what you might be looking for is another golden zone area, or you might be just looking at any of these lines along the way. But how can you tell which one to choose? Which one are you going to choose if you want to get out of the trade? How do you get out of this trade? Well, you can choose any one of these lines. It's really simple. What you do, you let this break. I would try and head for the 50 or the 618 at least, at the opposite golden zone, which is fair. Similar to price action, what you want to do is you bought it with a green candle coming out in the golden zone. You wouldn't have bought it in the red candle. You would wait for the green candle to come about, then you would have bought it. You waited for that green candle to close, and then you bought it, and off she went. Now what you want to do, you wait for the red candle to hit an area. So the green candle is going to hit an area. Big red candle confirming the downside, breaking to the downside. And then when it breaks to the downside, that red candle, that'll be an area where the fib extension will tell you the price has kind of had enough, it's getting out. Or if it gets up to the 618, starts heading down, comes through the 50 and starts breaking to the downside, then it's broken to the downside. Now you guys know that we don't use fib extensions, and if we were to use fib extensions, that would just be one way of doing it. But how do I do it if I just don't have fib extensions and I'm just using price action? All you do, you just draw a trend line in, the same sort of trend that you've got here existing already. And then all you do is you wait for the price to get up to these levels at the top of the range, and then you can sell it off there. What you can do effectively is you can take another trend just out of price action. You can draw it from where you purchased it, draw it up here. And if it breaks back down to the downside through that support and heads on to the downside, guess what? It's going down again. It's broken to the downside. It's counter trending and it's going the other way. So it's very easy to find levels. You can find levels of supply here as well if you want to put them in. But that was just so that I could show you how the Fibonacci works. And if you know how the Fibonacci and how the Fibonacci extension works, at least you know how other people are trading as well. And if you ever need to use it, you know how to use it. It kind of helps to know what's going on in the markets and not just have the one system like we do with the price action, so to speak. Now you know how that works. Let me talk to you about strategy and system. Come back from the charts. Let's go and chat. Now you know exactly what to do with Fibonacci. Now you know how to work with price action, because that's what we work with. And that's the videos I show you on every single video. I show you how to trade with price action with nothing on the chart. I show you how to trade with no indicators. And I show you how to trade with support and resistance. And I told you 100 times we trade three ways. We trade with the trend, which you can use Fibonacci for if you need to. And we trade in a range, which is between the two lines. And then, of course, we counter trade when it breaks structure. We trade breakouts. Either way, whether it's in a trend, whether it's in support, whether it's in resistance, doesn't matter. We trade with that structure. And that's as simple as our trading gets. It's not complicated. We don't have to get overcomplicated with everything. But now, last week, I've shown you the RSI, the Relative Strength Index, and this week I've shown you Fibonacci. I'm doing a sort of a series on little charting things for you guys so that you guys can understand what different systems there are out there. And if you decide you want to rather use a different system to our price action, those systems are available for you to use. Just remember that when I trade, I prefer to use my price action or nothing on the chart. At the end of the day, a chart is 50-50. It can't predict the future. It can't tell you where the market's going. Nobody can tell you where the market's going. The market has one thing, one flaw, and that flaw is this. To make money in the market, you need to have time in the market. You cannot time the market. Timing the market is near impossible. Now, how do I make money if I can't time the market? Well, then I need a business plan. Then I need a strategy. The odd thing is, when you get into trading, you don't have a business plan. You don't have a strategy. Most people don't. Don't tell me you did, because most people don't. I don't know why that is. Because if you wanted to start a shop, you want to start a factory, every single person I know would have a business plan of some nature, knowing how much capital they're going to need, how much money they're going to need, are they going to need a premises, are they going to need a factory, where they're going to set it up, how many people are they going to need, what it's going to cost them, what are they going to make, how they're going to make it. You know, all these questions come into play. But suddenly when it comes to trading, oh, we'll just go and do a course and we'll start trading. Doesn't really matter how we're going to make the money, because we're just going to trade, aren't we? And that's the problem. That's the whole issue, is you think that charts are going to make you money. You think that a win rate is somehow going to make you money. Let me have some coffee. Coffee's always good, isn't it? Now, the whole point here is to have a strategy, and the strategy is simple. And I've told you guys the strategy over and over and over again. And it's so easy. And the strategy is simple, and it is to make more on your wins and lose less on your losses. And a lot of you say, but how can you do that on a 4-hour? Or how can you do that on a day chart? Well, it's the same as trading on a 5-minute chart. There's no difference. The difference is you've got much more space on the higher time frames. You can take much bigger trades if you want to. Just because I show you on a smaller account here doesn't mean that we don't have bigger accounts that we trade on, or bigger accounts that you can make money on, or that you can't take bigger trades. The strategy is this, and that is to keep the risk the same on every single trade. Keep the account size the same as well. So if you have a $25,000 account, don't change the size of your account every 5 minutes, because then you're just fooling yourself as well. If the account grows and you want to keep the money in the account because you trust the broker for whatever unknown strange reason, then you can, of course, make a conscious decision and change the size of the account and say, well, actually, I'd like to have a $30,000 account. I don't want a $25,000 account anymore. Or maybe you just want to add money to it and make it a $50,000 account. I don't know. It's up to you. It depends how rich you are, how poor you are, how much you can afford, how much you can't afford. But believe me, you can't take $1,000 and turn it into $1 million overnight. Theoretically, it's possible, but practically it's not. Most people don't. Most people lose money in the markets. Did you know that trading is so risky that 70% of traders lose money with normal swing trading? Let's not talk day trading. Day trading, 99% of traders lose money day trading. And that's a fact, and that's just how it goes. You're going to have to live with this. There's nothing I can do to change that. There's nothing I can do to make that different. You have to understand that you're going to lose trades. In fact, you're going to lose half your trades? No! You're going to lose more than half your trades. And you're going to say to me, but Rob, how can I make money if I'm losing more than half my trades? An interesting question. A question I get quite often, because the reason I get that question, obviously, is because you've gone on a course and you were told on that course that a win rate's going to make you money. How can a win rate make you money? You win 7 trades at $10 each, and the 8th trade you lose sort of $1,000, then you're kind of in a loss, aren't you? But you got a win rate. You got a fantastic win rate. You're an absolute genius. No, that's not how it works. Look, what you do is you risk the same amount on every single trade. And I choose 1% of the account, because 1% of the account implies that if I lose 10 trades, I only lose 10% of my account. But if you want to risk 10% per trade, that's up to you. If you want to risk 5% per trade, it's up to you. If you want to risk 0.5% per trade, it's up to you. A lot of people risk 2% per trade. I prefer 1% per trade. Bear in mind, if you do lose 10 trades in a row, that's pretty unusual. Shouldn't happen. But what you want to do is, on those trades that you lose, keep the risk the same. Doesn't matter what the percentage is. Doesn't matter how big you're risking. As long as that risk remains the same on every single trade. And it's according to the size of the account. That account. Not the other account, that account. You can have more than one account. I have more than one account. Why do I have more than one account? Because I don't trust brokers, and I like to keep things separate, and I've got some funded accounts, and I've got some cash accounts, and I've got all these different things going on. Why keep it all in one place? Because you wake up on Monday morning and the broker says, hey, so long and thanks for all the fish. You don't want to do that either. That's not going to help you in any way, shape, or form. Now, I've shown you in the previous video how you can take a trade, how you can work out your risk on the chart. So I'm not going to go there now. All I say to you is keep the risk the same on every single trade. Work out the size of your trade. How do you work out the size of the trade? The first thing you do on the chart is you go to the chart, you choose where your stop loss area is going to be. That stop loss area doesn't need to be close or far or anything like that. It just needs to be in an invalidation area, an area where you know If the price gets there, you don't want to be in that trade. That's where you want your stop loss. Choose that first. Then work out the size of your trade from there back to your cost based on the amount you're risking on the trade. So if it's $250, work out how many contracts or lots or whatever you can buy from that price back to the cost. Now you know the size of your trade. Now you just got to make sure that your risk to reward is reasonable, that you're going to make more on the win than you are on the loss. It's a sign of insanity to be risking $250 to make a profit of $50, or to be risking $25,000 to be making $500, if that makes more sense, because the numbers are bigger. It's a form of insanity. It doesn't sound too bad when it's $50 or $250, but it sure sounds bad when it's $25,000 risk for $500 profit. That will give you a little bit more of an aha moment. You need to make more on the wins. You need to make bigger profits on the wins. Imagine how many $500 amounts you would have to make up one $25,000 loss. Insanity, isn't it? So you need to make $26,000, $30,000, $40,000 for every $25,000 loss. Or you need to make $400 for every $250 loss. Very similar scenario. And that's how we work with our system and strategy. The system, we work with a price action, we choose our trades. The charts are there so that you can choose your trade, so that you can manage your risk, so that you can manage your trade. Makes it easy for you to manage your trade. It gives you the platform to apply the strategy. And without the strategy, you cannot make money in the markets. If you're just charting, if you're just on there charting, thinking, I'm going to take a trade here and win, I'm going to take a trade there and win, and on every trade you're taking a different size trade and you're just like willy-nilly going in there, you're going to struggle to make a profit. Your favorite trades are the ones that are going to lose, and your most least favorite trades, the ones you didn't want to take, those are the ones that are going to win the biggest. And guess which ones you're going to have taken the smallest trades on. Fair to say that you'll probably take the smallest trades on the ones that are least favorite to you. I just thought I'd bring that up to you guys today. I thought I'd show you guys how to work with a Fibonacci, and I thought I'd show you guys a strategy. If you want to know the strategy in more detail, simply watch the last video, because that does actually give you the strategy in detail. Guys, don't forget to join the members area where you get the trade of the day every day and a whole bunch of other nice things. There is a free Forex book for you down in the description. There are some funded accounts down for you there in the description as well, if you need a funded account, which is very handy for in between when you've done your course and you're doing your cash. It kind of helps you with your discipline and all the rest of it. And if you've watched the video this far, do me a favor, hit the subscribe button and the like button and give us a thumbs up. I don't know if you get hype where you are, but we don't, because we're in South Africa. But if you do, give it that too. It's been nice chatting to you guys again. Don't forget to join us for the live shows on Tuesday and Thursday every single week. Thanks for watching. Keep your feet on the ground, reach for the sky. Cheers, ciao, and bye.